It's me Pavitran here. Today we're gonna discuss or forecast crude oil upcoming levels. Before the forecast, previous week, maybe a replay or recap or what the price has been doing with the levels which I have informed you. And before all that, I'm trying to find some pattern in the live markets, and if I'm satisfied that, I will be posting it in my group. And these are the patterns which I have found. I'm working on it. This is not exactly, I won't be taking trade based on this. I just want to know the market sentiment. Sometime we might get confused whether the lower highs and higher highs, you will be getting confused. So some of the patterns might give you a clear indication is that how market is going to react, and what are the expectations will be we will get in mind when the pattern breaks, or maybe it can give some of the clear view that how market is going to behave, so that we can combine with some of the indicators, and if you possible we can able to take an entry over here. And last week was quite, I was expecting a sell on rise. If a follow through comes, the main thing is that you should notice a follow through has to come. So last week was a great sell off week, and as I expected, Monday morning it was a kind of bearish channel. It's very obvious, if you can see here. I've just connected from here. This is the, consider this as an recent lower high, this is a recent lower low, and this one is a second lower high, and this is a second lower low, third lower high, and third lower low. So this is a pattern bearish channel. It's forming lower lows and lower highs. On the morning it was not a great positive one, it's a mild positive one. After that follow through happened, this candle broke the trend line, or it broke the bearish channel. Afterwards, if you can see, this is the first lower high, it has been taken out, the recent one, it has been taken out. So once that is taken out, that is an indication that market is not bullish, or not very much bullish, or you can even say market is not bearish at the moment. So first indication that a lower high has been taken out, the first indication is you should not be so much bearish. So if you have say quantity like 50 or 60 lots, you have to cut down maybe half, or even one third, or two third of it you should cut down, because the recent lower high has been taken out. If you are trading in heavy quantities, then you have to cut your positions. The main reason for that is, if a first lower high is being taken out, that is a clear sign that buyers are trying to come in. They have not came in full fledged, they are just trying to come into the market. So even if they form a higher low, then it is clear that they have come in pretty hard. So you should be very sure of the position you are holding. You have to check for the market sentiment always. And first indication, as I said, when lower high is taken out, you should not be so much bearish. Second indication is that just look out for new higher lows being formed. So this is the first higher high here. Now you have to wait for the lower low. If it breaks again this recent lower low, then market is bearish. You can initiate fresh positions, fresh shorts over here. Until this break, then we should not be in bear trend. So market has started to turn, or started to reverse at maybe around 5th of October at 1300, that is somewhere around 1 o'clock in Indian Standard Time. So that is a clear indication is that higher low is in formation. So once even that is confirmed by this rally, then you should be fully exiting your positions. Why? Because lower high has been taken out, and the new lower high has been formed, new higher high has been formed. So it is very clear that the bearish channel gets broken, and it's trying to turn into a bullish mode. So this is the maybe the last place where bears might try to come into the market. So even this resistance, or this place gets taken out, or this zone gets taken out, we can able to defend, or you can say the traders who have shorted in this region, they will try to defend when the price tries to come near this region. And it will be very obvious that you will find either inverted hammer or bearish engulfing patterns in that region. Once you get this, we can able to short with the previous candle as a stop loss. So let's say for an example, maybe this is the candle at somewhere around 5:30. You can see a sell off from started here, and after that you can see a little retracement, and if you can place a stop loss just above the high of the previous candle, you will be seeing. And this is the stop loss which we have placed. The main reason for our entry is this is the place where the previous shorters has been keeping the market or placing their short position. They are trying to push the market down, so the buyers are trying to gain control of it, and they are coming to the same spot. So whoever sold in these positions, whoever shorters will be ready in this position, they will try to not let go of this rally. So they want to keep the push down again from this level. They will try to keep the push down from maybe here, or even can even form a new low. We will know when that will be taken out, when the previous candle high, that stop loss, whatever stop loss we have faced, when that stop loss is being triggered, then that is the place where the trend change is actually happening. Main reason for our entry is the recent high or the last bear control region is being taken out. So until this candle high is being taken out, then bears will be in control. And as you can see at 18:30 that has been taken out, then you have to switch your positions, or you have to switch your mindset from being so much bearish to so much bullish. So this is the actual crucial time for you to decide. Though this candle given a nice entry, it has given a great confirmation that I am not going to fall further, I am going in for a buy. So of the next candle, you wait for a retracement and you have to enter, and you can book this rally. It's not very obvious that we have to switch positions immediately. Always wait for a confirmation or a candle close, even if it's for half an hour. I usually wait for a candle close and determine what's how I'm going to do in the next half an hour of the trade. Why? Because some of the times which I have noticed is that it will give a green candle maybe at opening of the candle. From here it will start to rally up, and again if before closing it will again rally down to the same place where it had opened. So to avoid these kind of things, I will always wait for a candle to get completed. This is the rally, and after that you can see a little consolidation. I have even drawn the pattern over here. It's a kind of an peanut shaped, or you can even say a triangle shape, whatever it may be. And if it breaks, then it's bullish on upside. If it breaks down on closes, if it's a maybe a bearish candle close, it can even lead to a fall. We don't know which pattern will give a break on upside, or which pattern is going to give a break on downside. You have to just draw a pattern, wait for a candle to close either above that or below that, and you can go for an entry. It has given a break on upper side, then you can see the rally over here, and after that it has started forming see, it's a clear bearish channel. This is the first lower high, second lower high, this is the third lower high, this is the fourth, and this is a kind of fifth. It started to give fall, and after that it moved in a sideways. I won't be trading these kind of patterns in sideways market. Why? Because we might not be able to get a clear directional play. This is a kind of an range bound play. I won't prefer to trade here. See, this is a kind of a breakout I will be looking out for, either in an upside or in a downside. The breakout should be a good one with a good bullish candle. This is a prime example for that. You can see a great bullish candle, and even you can see a bullish candle and follow through bullish candle has happened. In these things, there is no such thing as a great bullish candle. So it's all volume will be very less if you check with the volume, and I don't prefer to trade in these times, because you will get stuck in a position. Either it won't to move, or it won't be moving very fast, or it will get stuck in a place. I want either it should move towards my target, or it has to move towards my spell sell within a short span of time. So that is what I will be expecting when I get into a trade. So that is where I have fixed my time to 7 o'clock at the evening. That time will coincide with American market opening, maybe around 1900. That is a place where most of the volatility tries to kick in, and American market usually opens, and most of the players will try to get into the position. So it's a kind of a great probability where if you have less stop loss and if you have bigger targets, then the probability is always in your favor. If you, even if you are losing for 5 consecutive days, 1 or 2 trades, and you will be in the rally, you will end up monthly in profits. And see here, we haven't find any pattern over here, and on Friday and on Tuesday I think it's always started to go up further, and inventory also has been a little positive note, so it is not allowing a fall. As you can see, it has went all the way up, and as you can see, this is again a higher low, sorry, lower high, and this is a place where I actually took entry. So it is given a break, and I actually took entry in the retracement candle, and the stop loss has been placed previous candle low. So that stop loss has been triggered on Friday evening. That is not an actual trade. I thought two reasons for my entry. The first reason is it gave a bull candle breakout, and the second reason is that rig count data will get released somewhere around 10 o'clock. So I was expecting that this is some kind of pre-push that market will try to break this range, and I was expecting that on a release of the rig count data, it will even move further. So I was very much bullish on crude oil because of the recent swings. These are the recent high which has been taken out. So it was trying to form kind of an higher high, or market sentiment is so much bullish. So I was not ready to short the market. I was ready to take positions only in the long trades. I was expecting that. So this gave every confirmation for me. It's broke the trend line, and I was always enter into retracement with previous candle low as my stop loss. And finally I was expecting volatility, when usually at Friday night around 10 or 22:00 hours, usually data comes in, then it will either take a stop loss or it will achieve a target much faster. So volatility plays a major role in that. As usual, stop loss has been triggered, and after that you can see a fall. For example, if I haven't placed my stop loss over here, so what would have happened is that from the fall of 41.20 to 60 or maybe 50, so 70 cents will be gone in a seconds, or will be gone in an half an hour. So I don't prefer that. Before entering, have stop loss in mind, or else place stop loss the previous candle high or low. If the previous candle high is taken out, then market is going to rally in that side. If previous candle low is taken out, then market is going to rally in that side. So the probability, if a candle breaks high, it's always 80%. If a candle breaks a previous candle low, then probability is 80%. So you have a 80% odd chance that market is going in that direction. So why we have to take a risk of maybe around if you try to get in a retracement, maybe around 10 to 15 cents here and there. You have to fix a timing. If you are okay with the volatility, just fix your trade timing to 7 and 9:30. So I usually trade at 7 o'clock and 9:30. If I see a trending market, then I will be sitting in front of my laptop or screen somewhere around from 5:30 in the evening. So basically I will be ready for my trending market to keep on continuing the same direction when US market open. Say for example, this is a place where maybe around 8 o'clock, you can see this candle it broke, and after that it was traveling upside, and on 8th of October 12 o'clock it give a big green candle. After that from 12 o'clock it was rallying till somewhere around 5:30 to 6. So that is where I decide that okay, this is a place where we should have to go along for a long position. So before that, what was the stop loss I have to think in mind? The previous candle low. Simple. Maybe at if you can able to see the market at 5:30, you will get a nice odd confirmation at this level. mm, See, this is a 5:30 candle, maybe 17:30, which is what represented. I am just saying in India market time. That was a beautiful green candle which covered this sell candle, so that selling has been negated. And after that, you can see if buy in retracement with the previous candle low. So this is the candle low. This candle low somewhere around 40.56 or 55. Even you can keep stop loss at 50, no problem, based on risk capability you're holding. Try to get into a retracement. Sometimes retracement will be till the bottom, or sometimes retracement will try to come near maybe 50% of the candle, or sometime it won't give retracement, it will start rallying up. So you have to decide whether on what type of play you are going to get in, whether you are going to get a deep retracement, we don't know, whether you are going to get off, we don't know, whether we are going to get retracement, or we don't know anything. So just hoping that retracement has to come. If retracement has to come, you are hoping that you will enter only in retracement. I enter only with retracement. Why? Because my stop loss is getting reduced. Say there are people who will enter on breakouts. Say breakout is 40.80, the stop loss will be around 30 cents will be the stop loss. And while I enter for deep retracement, maybe around this is 65, my entry will be at 65, then 15 cents. So that is the difference. I have to decide. Mostly my stop loss will be around 15 to 20 or maximum 30, based on the previous candle low. So previous candle high or low will determine. If I am entering before the volatility, my stop loss will be maximum 15 to 20 cents. If I am entering after the volatility, then it will be somewhere around 20 to 30, at max 40. So that is the range my stop loss will be. And this is a great confirmation for us to go long, and this is the recent low, and I am placing stop loss just below this, entering at 65. All I have to do is wait till 9:30. Why 9:30? Because when market is trending from 12 o'clock to 5 o'clock, then there is a huge possibility that market can trend still further on the same direction till 9:30. Same way, after this I will give an example why. And this is a place where again from bottom it went all the way up, on 7 o'clock too it tried to come down, and after that it tried to go up. And as you can see, the big red candle. So once the red candle comes in, either you can take a stop, or you can take a TSL over here, and you have to wait for another opportunity to go long. Usually these kind of retracement won't be coming into pretty hard. When it's a trending market, it usually retraces at exactly maybe around 2100 hours, or maybe around 9:30. From 8:30 to 9:30, that is where the retracement, a small retracement, might come in. That is why I usually trade at 7 o'clock, and I will be waiting for counter trend strategies at say I have went long here, so I will be waiting at 9 o'clock to short at whatever price crude has been trading on. So I will be waiting for these kind of trades. Even if it's not going to show any sign of bearishness, I know market can reverse from that position. If it reverses from that position, then it will be a huge bonus, because without confirmation we are going to enter into a trade. I will give an example for that. I have been doing that since many days. I have been getting good results, but the problem is stop loss. Many will not be okay with this kind of a trading. Say for example, this is the trade I actually taken on that day. On 1st of October it fell from 12 o'clock, and as you can see, as I said before, if a market is falling from, or market is been rising or falling from 12 o'clock till 5:30, then there is an 80% odd chance that the market can still go into the further direction. Same thing happened over here. It's happened samely. Market started to go further down, 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 and at I was saying it can reverse either from 8:30 or 9 o'clock or 9:30. We don't know the exact timing, so you have to go with the probabilities. So this is the 8:30 candle. We have to place exactly buy at the low of the, we have to place order at low of this candle, maybe around 37.65. then stop loss, I won't put stop loss actually. I will be having stop loss in mind, maybe around 30 to 40 cents will be in mind, and I will be expecting a market to close further down there. If it closes down, or if it been trading maybe around 5 to 10 minutes below that, then I will exit my position at whatever cost. If not, then there is a huge possibility that it can reverse from there. So as you can see, reversal happened. So we are expecting a reversal at 8:30. Reversal happened, but we are not very satisfied with the reversal, so we have to wait for another half an hour. At 9 o'clock we have to place our entry with the low of this stop loss. Sorry, we have to place sell order with the low of this 8:30 candle. After this candle get completed, and at 9 o'clock I will place a buy order at 37.65, and I have to wait for half an hour. See, market came all the way from the top till bottom, took our order and started rallying up. This is the place where we are looking for retracement. Why? Because from morning it has been falling, from 12 o'clock it has been falling continuously. Now we are expecting some kind of mean reversion. That's it. It's a we can say mean reversion, we can say retracement, whatever it may be. We are expecting a reversal from 9:30 or 8:30 to 9:30. In that 1 hour range, we are expecting some kind of a reversal signature, or some kind of reversal trend, or some kind of reversal patterns, or some kind of reversal candlesticks. So once we get the confirmation, then it will be very hard for us to go, because stop loss will be big. So we can't enter. See the next candle, you can't enter at 38, and by placing stop loss at 60, that's nearly 40 cents as a stop loss. So I am not personally can't able to take that much of a stop loss because of this huge trend. So you're going against the trend. There is literally 70 to 80% chance that it can collapse from there. So why to go a bit against the trend, that too with 40 cents of stop loss? Instead I can try with maybe 15, 16. I know the timing that crude oil might try to reverse. If it's falling from the morning, it can reverse from 8:30 to 9:30. In that zone, maybe some of the markets, other markets gets closing in, maybe crude oil will try to give a short retracement rally. So that is a play that has happened on the, maybe around 1st of October. So this is the fall. I have explained in the fall how I will trade at now I will explain how I will trade when the market is rising. So same as you can see, market has been rising pretty much, and as you have to wait till 9 o'clock. If the market has been continuously rising, and see from the morning, or even from 12 o'clock or 1 o'clock, you can check it. From 1 o'clock it has been rising, and after that it has been continuously rising. So this is the 8:30 candle low. So first thing we have to take into consideration is that market has been trending from 12 o'clock or 1 o'clock till 9:30. Then there is a slight chance, or maybe maybe 60 to 70 or 70 to 80% odd chance that it can give a retracement rally. So we are trying to capitalize on the small retracement rally. We don't know how far it can go. Either it can give a big retracement, either it can give small retracement, but retracement will definitely come into play. But we have to wait for patiently wait for maybe till 9:30 or 10 o'clock. If you are going to enter at 9, then you have to patiently wait till 10. 1 hour is the timing. Either it may be going to go in a big loss or a big profit, we don't know. If you want to avoid a big loss, then fix your timing of stop loss as 9:30 is your stop loss. Here the stop loss is your time. It's not about a particular price, it's about only time. Maybe see, this is the high which has been made. You, after the candle close at 8:30 and opening at 9, you place a sell order at the high of this candle. You don't know that whether price will try to come near this, or it can even break, or it can even go further. We don't know whether you will get an entry or whether a stop loss will triggered. We don't know anything. We are just expecting reversal to come at somewhere around 9 o'clock. If 8:30 is not the reversal time, then we are expecting reversal to come at 9 o'clock. If reversal is not coming at 9 o'clock, then we are expecting a reversal at 10 o'clock. So from 8:30 to 9:30 we will be expecting a reversal from there. So it's not exactly that after reversal comes we are going to trade. This does not happen like this. Why? Because it's a buy trend, we are going against it. We are expecting the reversal at particular time. Once the reversal comes in, it is having an maybe 20 to 30% only chance that it can continue in that direction. So we are not very sure of it. I won't be betting against 20 to 30%. I usually bet somewhere around 80 to 90 odd levels, so maybe from 70 to 90. So when the percentage is from 70 to 90, we can expect, or we can get into a trade, that if a trade goes in your favor, then there is a 70% odd chance that you will make a profit. So always be with greater probability trades. So we have entered here, and we have been waiting for half an hour. After 21 candle close, this is the profit we have made. In this scenario, this is the profit we have made. In this scenario, this is the profit we have made. Maybe from 65 to maybe around $45 or $50, sorry, 50 cents, and from this region it's 55 to 20, that's somewhere around 30 to 25 cents we have made. We exactly don't know how much we are going to make it. Then once it started moving in our favor, then we have to trail your stop loss. In this case, either you can close your position, or in this case you can even trail. That's up to you. I usually prefer to close my position in just half an hour. Why? Because this is our entry. I will close my position. If it retraces a little more down, then I will get into another fresh position. I won't be losing this much profits. So I don't expect market to go up in a V-shaped recovery. I won't be expecting that. I know it has a capacity to go, but even though I will book at maybe my holding will be half an hour time. I will enter at 9 o'clock. I will close my position at 9:30. Simple. That's purely based on time. Maybe no one will agree with this, or no one will work out with this, but you just keep track of it. Whenever market is trending, from either from morning till 9:30, or from 12 o'clock to 9:30, if markets is trending till 8:30, then you can probably short against the position at 8:30, or go long against the position if a market is falling. If you do that, then retracement might try to come into that position. I'm not saying very surely. It's 70 to 80% or 70 to 90% odd chance that it can give a retracement rally. Whenever market is trending, there is a possibility that this can happen. If you can backtest this, well and good, you can do that. You have to simply scroll back, and you have to look for the days where the rally happened, and you have to check for the timing, whether the rally given a retracement, or it has taken a stop loss. You just access it, and you will know whether you can able to trade this or not. This is just a simple setup I've been using, and I know stop loss is time. Many of us will not prefer time as a stop loss, because without knowing where to fix a stop loss, if you are going to trade, then it's quite tricky. Before entering trade, have a setup, or consider if you are going to enter. Say for example, if you are going to short here, then 30 or 40 cents you will be your fixed stop loss. Just don't put it in the screen, just have it in your mind. Once that gets taken out, then wait till 3 minutes candle close, or maybe a 1 minute candle close, or 5 minutes candle close. If a 5 minute candle close comes above your stop loss level or comes below your stop loss level, then you can exit. So it's pretty much fair that you got at least one confirmation, you can exit your position. No, usually I don't. This has been working well with me, and if you want, you can try it out. Whenever market is trending, be ready at 8:30 to short or go long at 9 o'clock against the trends. So usually it rewards very well. During that time, bearish divergence or bullish divergence will come and help you. So if that comes, then it's an additional confirmation for us to go in with some more lots with stop loss of previous candle high or low, or previous support or resistance, whatever it may be. And this is a small gist of what I have been trading, and we'll try to explore it more when time comes. And I will also give you a suggestion, or if I'm going to take trades, I will give you how to trade that. And on coming week, market is completely on a bull mode. We are not expecting any kind of retracement towards the top side. Why? Because as you can see, this was the recent one, it has been taken out, and we are expecting some kind of a great rally on further upside. And only consider this 41.50 should be taken out for 43.50, and on lower side 38.50 has to taken out for again 35.80. so let's see how this week goes on. So the range should be 41.50 and 38.50. It's again $2 rally, $2 to $3. We exactly don't know how this range is going to play, because market is completely on a bull mode from Monday last week. It's been on a complete recovery, and we are hoping that it can continue the same, or it can even try to consolidate this in the region. A strong bull comes only when 43.50 taken out. Before that, don't expect anything and don't blindly go long. Just try to be on neutral zone. No holding overnight position for a buy, no holding overnight position for a sell. Just be in a neutral zone unless and until 43 taken out, then go for a buy. Only if 43 is taken out, go for a sell only when 37 or 38.50 is taken out again. So until then, be with this position. Just play with the levels which I have mentioned here. If you're not comfortable with the levels, just switch your time frame to 1 hour. Just mark the recent high lows, and you will get a levels. There is no perfect rule or a perfect trainer or perfect support. There is nothing like that. Whatever feel you're comfortable with, whatever you're okay with, whatever the logic you are applying, if you're satisfied with, there's come you can make money through that. There is no perfect system, and you can always play with this range. And the range for this week is 43.50 bigger one, and 38.50. Smaller one is 41.50 to 38.50. So only when 38.50 taken out, be a seller. Only when 43.50 is taken out, be a buyer. Until then, play with the ranges. These are the levels you should be keeping watching on. And if you find any similar patterns, and I will draw it and post it in the group. Thank you.